In Investing 101 today, how to take the emotions out of investing. For more, we have Debbie Bloyd, the CEO of DLB Financial Services, with us right now. Thank you for coming on our show. I think sometimes people put too much emotions into investing, especially during the pandemic. What are you seeing?
Thanks so much for having me on the show, first of all. Yeah, last year was tough. It was tough for investors because they didn't know anything about COVID or how that would work with the economy. There was an election, and that's when people pull back and get scared. And when they get scared, they want to pull their money out. But the market did really well last year. So if we let people pull out every time they get nervous, they're going to lose a lot of money in the market and really could clear out their retirement accounts pretty quick.
What are your suggestions for keeping emotions out of investments?
Sure. Well, I think you need to have someone to talk with that's not also Chicken Little. If you talk to your neighbors and people at work and your family members, there's a lot of people that have had a bad experience in the market. And if they're not successful, why are you messing with them? Why are you talking with them? If they are not successful in money, do not take advice from them. And so many people listen to Uncle Harry, and Uncle Harry is talking about things that happened in the 70s or the 80s and how he got hoodwinked or how he lost money in the market. Well, that goes more to Uncle Harry than it does the market. The market is going to go up and down, and that has nothing to do with your long-term strategies. So when we talk to people every day, it's about, this process, this is the amount of money that you want to have invested. If they're investing a little bit every month, which is what you're supposed to do, so you dollar cost average, you're going to buy some stocks and bonds when the market's good, and you're going to buy some that when the market's not so good. But overall, if you have a 10 or 20 year platform to invest in, you're going to be able to make the difference up. You're going to keep buying those investments, and over time is what we're talking about. Over compounded interest over years and years and years is going to get you to your retirement goals. Now, if you're too nervous, there are things called annuities, and annuities can be fixed or they can be variable and invested in the market. So if you're really a nervous Nelly, I have a lot of people that are nearing retirement or in retirement. They can't afford to lose any money on any kind of market. And so we put them in a fixed annuity so that they get guaranteed income. So now they have maybe their pension, their Social Security, and they also have their income coming in from that money. Now that money may not grow as fast, but it'll be growing and it'll be safe. It's not, it's a life insurance kind of investment. So it's not going to be tied with the market exactly. So if they're scared of the market, that's a great way to go, a great way to be safe.
Well, thank you again. It was great to get your tips.
Thank you.
More Business First AM. Check us out on social media. We're on Facebook, YouTube, and Twitter. And go to businessfirstam.com for where to see our show on TV.